Hi, Face. Let's have a great week. How's everyone doing? Everyone doing okay? So I have a little touch. Hi, how are you, Sivash? A little touch of vertigo today. I'm a little dizzy, so don't trust my calls. Vertigo is where you can't tell up from down. A little dizzy. Anyway, here's a tail that's wagging the dog lately. We all know it's the US dollar, Chinese yuan. And I was looking at this weekend, and it wouldn't surprise me if it could generate another high. We did diverge up here before this pullback, but we didn't on the 4-hour TF. A little bit, but way over 80. So if that happens now, I don't think the 4-hour will confirm. Do think that when it does top, that this may just be the beginning of it in this trade war. So I would look for entries, long-term entries back around, halfway back, 653, maybe 646, because we could end up having some fib extension of this if this weapon continues to be used during this trade dispute, which I don't know. I don't see any let up on it. Give me a Y if you're with me. So, long-term entries would be on some fib retracements. So just because you miss this doesn't mean you miss the whole move, right? Very powerful looking weekly move, isn't it? I mean, we got over 78% back here. So these highs will probably be challenged and taken out later in the year. Just a guess. I'm a guesser. So getting back to something that I think really surprised the market is how deep it was, because all last week, everyone was hoping that they'd have a break to buy the yen, right? Well, here you go. So, if this was a breakout, we're right here. I wouldn't be surprised to see some type of rally here. I don't think that we're going to be able to take out these highs, though. So maybe the yuan makes a new high, and the yen had been rallying in sympathy. I know there's some BOJ changes that happened here that they announced, but I'd be looking for rallies back to 12, 1220 to short for at least another one of these, a couple hundred pips, so we get up to 1220. Maybe we could trade 1210. That's how I see that. And if those two scenarios are going to happen, then perhaps we get a bounce in the dollar. I don't think we're going to take out this high. This looks like it was a pretty nice stop hunt with very good follow through, but we certainly could rally back to 94.80, even 95 to attempt shorts there. Okay. Index wise, they don't want to die. It looks like they could. Maybe we start taking out 27.90. But personally, I'm waiting for one more high in the S&Ps, and I'm looking towards the end of the week. Want to announce our interviews schedule. Today we have Kim Clayman at Steady Options. Pretty well-known option guy, has about, 30,000 followers on Twitter. We have Jake from Forex Education. He's had some interesting tweets, so I invited him. And this one wasn't easy to get. Tim Knight, if you're on Twitter, his handle is Slope of Hope, and very highly respected technical guy, a real market veteran pro. And then one of Face's favorites returning, David Brady, at Global Pro Trader on Thursday for investing.com day. And what's interesting about David's last visit here is his interview is still being retweeted from last time, months ago. So months afterwards, people were still enjoying going back and listening to it. So he got a lot of coverage on that interview. Looking forward to getting an update from David. David has some views that made him move and build a farm in the middle of nowhere in Canada, and he's prepping. So he's one of those worried guys. And we wrap it up with Norm Linsky on Friday. So that should be a great day for Norm because it's a total lunar eclipse. You know, he's an astro guy. I think everyone should play The Dark Side of the Moon by Pink Floyd on Friday. Everyone promised to do that and celebrate it. Sometimes you get some interesting market action around eclipses, both lunar and solar. So full schedule for the week. I know we want to look to make some money here, so that's my ideas. We get a bounce in the dollar, maybe it's a sell on a turnaround Tuesday. Let's see if the yuan can eke out another high. I'm still being patient about being bearish. I have partial positions on in ETFs on the stock indexes. And what was kind of surprising was, and I didn't even really notice it till Friday, looking for the yield charts here. Quickly in gold, I guess, you know, Blake's got a nice pattern in play. He's long from down here and the gold. So this is what I wanted to show was the yields. You know, the big rally that we had in yen, you know, if that correlation, this really hasn't been such a dramatic rally in yields, you know, 282 to 289 compared to the powerful rally that we had in the yen. You look at the daily. So we'll see if there's going to be a chance for your yields to rally. It should happen when stock indexes recover, and that would also imply some type of rally in U.S. dollar yen. Maybe that fib retracement up towards 112 for a shorting opportunity. So it's Monday. I don't do a lot on Monday. I kind of like to see how the market comes in and then look for fades potentially the next day. Watched a little rugby yesterday. Interesting game. I think France may have won. It was in San Francisco. I think we're only about a month away from football season. Watched the British Open. You know, Tiger made me think about, you know, how people talk about Tiger in terms, and you know, it happens in all professions. You know, it's lonely at the top, and then it's lonelier once you're not at the top. But you know, he's not a has-been, because even in trading, because has-beens only become that when they give up. And I'm really impressed with his still competitive spirit. You're not hearing the audio? Sometimes you have to log out again, Morrow. Everyone else hear me? Give me a Y. Blake, you hear me, right, buddy?
Yeah, you're good to go.
Okay. So that's it. You know, I'm looking to fade a yen, USD yen pop, and the metals should do better once this rally is over, if we get a rally in the yen. And stock market indices, I'm looking more towards later this week, early next week. So Blake, nice look at the week ahead. Got a lot of coverage on it. I think that, you know, I saw like, I don't know, something on your stream. There were like 800, 900 people watching it.
Really? Oh,
yeah.
I don't ever look at that. So that's great.
I know. Yeah. Well, you know, I'm a jealous guy.
It's good. You know, the week ahead videos hopefully give you guys a little bit of insight on what I'm thinking, and you know, give you some ideas going into next week. You know, I think it's good, especially coming off of a weekend, kind of just getting up to speed on, okay, well, oh yeah, what are the levels that I should be paying attention to, and you know, yeah. What am I going to be doing around here? You know, that's the important thing, I think, for for the week ahead video is just kind of giving you a little bit of a baseline of what to be thinking. But you know, you were talking about Tiger Woods, and you know, Tiger Woods, I root for the guy.
Okay.
Do I agree with his life choices?
Oh,
Not necessarily, but you know, but I'll tell you, when you say it's lonely at the top, I mean, the guy, you know, when you are the highest paid athlete in the world, or close to, I'm not sure if that's actually an accurate statement, but really close to, but dominant in your field and from such a young age, and you are, you know, he's not an ugly guy, and he's at the top, and, you know, people throwing themselves at him. I mean, you know,
I know.
Yeah.
That's always been hard for me.
Yeah, right. But so, I mean, I can't really fault the guy. I mean, you know, over his, do I agree with his life choices? No, but you know,
He's human.
he is.
You know,
I mean, if anybody was thrown into that situation, it would be really hard to not do the things that he's done, and especially when you are, you know, you think about like the average person. You know, we live our life, you know, as youngsters, and, you know, have fun and settle down and settle into our own. And I think
that's an interesting thing. He never had that, is what you're saying.
no, I don't think he did. And so for him to do what he did and go through what he did in his 30s is, you know, I look at it going, you know, didn't I do not an equivalent of that, but didn't I, you know, have my wild times as a youngster as well, and experience life a little bit, and, you know, again, you don't have to agree with what he did or how he went about doing it, but, you know, I think he's come full circle, and for him to bounce back the way he has, I really root for the guy, because
after all those surgeries, you know how many people would have said, you know, I have enough money, but you know, it shows his competitive drive, and, you know, just how much he loves the game. And he didn't quit. He didn't quit when everyone, you know, I'm sure for years, there's Tiger. He's lousy now, and, you know, used to be great. Now he's
three, 4, 5 years ago, I would have said he's never coming back. I mean, as much as I was rooting for him, I was thinking to myself, he's never coming back. And I, you know, and I'm a person who I play golf. I love the game. It's, you know, one of those things that I really, really enjoy to do. And I'll tell you, I was really rooting for the guy because I think he's great for the sport, because of his competitive nature, because of how he plays and what he does in the game. Not just for the game, but what he does, how he makes it so exciting. So I've been rooting for him, and it was good to see him really compete this weekend. And he's near the top of his game. He's like back towards all-time highs after taking a 30% decline. So,
88 too.
Yeah, he probably had a 38% retracement. You know, so I applaud him for you know.
What about is this a false breakdown in the end, and that's it?
I don't know. You know, first of all, I am short the dollar yen. So and I've been shorting it since last week. Well, since Friday. So and I have been kind of in and out of it after being short from 111.70, and I've been, you know, pulling profits, adding, you know, just kind of shorting it along the way. The thing is we're below the 111.
What a difference a week makes. Everyone was hoping for a break to 11.50 to buy it when it was up there with 114 coming, and what a change.
After the price action on Friday, there's, you know, I tweeted about it on Friday, and matter of fact, it's a tweet that I did look on yesterday. I think I think it's got like 60, 70 retweets or whatever. You know, I was basically pointing out what I pointed out on the week ahead video. You know, we had a massive breakout 2 weeks ago, and the market got extremely long dollars, short yen, They were thinking that we're going so much higher, you know, 115, 118, 120, whatever. And then we saw a massive reversal at the end of last week because of possibly the BOJ allowing, you know, rates to rise, if you will. And so the thing is the dollar yen, I think, positioning wise, was ready to turn, and that's the reason why it sold off so aggressively last night. Now we are consolidating, but I think what you got to look at here is not so much the yen. I think you got to really focus on these precious metals, because if you have the gold market, and I know I talked about this on the week ahead video, but if you have the gold market that breaks back above 1236, which is right here, okay, this is the breakdown point. If we break back above 1236, or we have silver that breaks back above 1560, that is going to really, I think, confirm the breakdown.
Yeah.
I'm sorry?
Yeah, nice looks at the breakdown, you know, it'd be a false breakdown, at least for a while.
Yeah, and in the precious metals, and if that happens, then I think you have to be automatically bullish the yen, which would be bearish dollar yen. So I'm really keeping an eye on precious metals today, seeing how they respond here, and if they continue to bounce, then I think you have to, you know, stay short these yen pairs. But I think traders are worried near term that the BOJ is going to make some changes to their rates, and that is going to be dollar yen negative. So we are below what I see as channel support now. Okay, so any rally back to like 111.30, and you got to be looking at being a seller, and so that's what I'm looking at with the dollar yen, and I think that that is going to you know, keep a lid on these yen pairs, and also we got to keep an eye on risk, because, you know, stocks are trading a little bit heavier. We're pretty heavy in earnings this week. I think Google earnings are today, if I'm not mistaken. So we have some pretty heavy NASDAQ earnings, and the NASDAQ looks, you know, a little weaker here, a little vulnerable. So I think that, you know, if risk appetite stays weak, the dollar yen is going to stay weak. And, you know, I was questioning whether the yen was going to continue to, strengthen if we have some risk off, but after the price action from Friday, I just kind of confirmed that we still have to look at the yen as being more of a safe haven type of currency. Should we see some risk off activity? So that's the way I'm looking at it right now. Excuse me 1 second. Okay. So anyway, let's take a look at the rest of the market. So here's the euro. The euro, we talked about this on, it was Friday or Thursday, about the Gartley pattern, and we bounced so aggressively from that 115.75 level. And I'm a little bummed out myself that I didn't pick up the euro dollar when it was down here at 115.75. It was such a great purchase. But, you know, now the risk is if we break above 117.50, the euro may continue to bounce. Am I bullish the euro long term? No, I'm not. I'm actually, I'd rather be bearish the euro than bullish the euro. But I don't know how I feel about the dollar right now. I think the dollar is also vulnerable. So, you know, maybe the better trade is going to be shorting the euro yen. I don't know, because the euro yen actually rejected the 200-day moving average pretty aggressively. And so now any bounce in the euro yen might be a good short. But the euro dollar, at least for now, looks like we are going to continue to climb back up towards this 118.50. I think the pound still in recovery mode. We had a false breakdown of the cable last week. So if the pound breaks back above 132, I think this trend line resistance right here, if we break back above 132, that's going to be pretty bullish the cable. The Aussie and Kiwi, I don't know how to play them right now. I think they're extremely messy. This is probably, if you look at the Kiwi, this is probably the messiest chart I've seen in a long time. I mean, look at this. How are you supposed to trade this? I don't know, and I'm not the, you know, I'm not even dealing with it, but I don't know how you trade that. That's a disaster. That's just a, you know, just a disaster price action. I'm not even sure what to do with that. The dollar Canadian, I'm still waiting on clues for, you know, some sort of NAFTA, you know, agreement or you know, talks to give us better clues. But, you know, if crude continues to rally, that could push the dollar Canadian, you know, back down towards 130.50 to maybe 130. And I am a buyer down here. If we get down towards, you know, below 130, I'm going to start looking at the dollar Canadian as a potential long. US dollar Mexican peso is just kind of bouncing around. And, you know, what else is really weak is the dollar Swiss. I've been hoping this thing would rally for the longest time, but it actually looks vulnerable now. And the fact that we can't sustain you know, gains above parity is a little nerve-wracking. I think if you're long, you're probably looking at, you know, the Swissy going, man, I can't believe this thing just can't hold a bid. And the thing is if we do get some risk aversion, if the market does sell off a little bit, you know, does the, you know, Swiss franc gain strength during a period of risk off? And I think that is, you know, possible. I really do think that is possible at this point. And if you look at the dollar index is really, you know, at channel support. And Dale, you had mentioned that the dollar could get another one more bounce higher before rolling over. And I think it's possible while we're in this little channel, but I'll tell you, if we break back below like 94 in the dollar index, then the dollar index is really going to come back under pressure. But
I lean towards that, like a failing rally.
Yeah. I mean,
look how they got all the shorts out with that spike over 50. And then failed. I mean, right. I don't think they could recover that.
Yeah, I think that's the big risk right now, is that we couldn't get above that 95.50. We stopped out some longs or some shorts, excuse me.
Yeah.
And so I think the risk is that it continues to break down. You know, but it's all going to be trade related. It's all headline driven right now. So it's hard to put your finger on it specifically. When everything is so, you know, headline driven. Well, I did want to mention a couple of things because this is going to be my last webinar for the week. I will be traveling this week. You're going to be in great hands. Obviously, Steve and Stelios is going to be here. Grega, Andre, I think, are jumping in this week to be here as well. You guys are going to be, you know, you're going to have great coverage throughout the course of this week, but I will be traveling to the Northeast, and I'll be back, or I'll be in, I'll be at my office from where I trade from. So I'll be maybe in the chat room a little bit Wednesday and Thursday, but we're also I'm bringing the family, so we're going to be doing a little bit of sightseeing while we're out there in the Northeast. And I'm actually meeting up with some of our ForexAnalytix subscribers. So for those of you guys that are in the chat room, here's our chat room. You guys can say hi. You guys are on Jumbotron, so there's if you guys are, you know, in the New York area, and we're going to meet up on Friday to have a couple of drinks before I head out to dinner. And so this is our ForexAnalytix community. For those of you that are ForexAnalytix subscribers, this is where I'm at all day long. Once I'm done here, I'm pretty much chatting here all day. So that's where we'll see you. And if you don't know how to get to that the chat room, you do it right through here. You can log into the chat room. I'm already logged in, so you can do it from the settings wheel. And last but not least, guys,
Blake?
yeah.
not the settings wheel. We've put a separate button there on the right hand of your portrait.
Oh, right here.
Yeah.
Yeah, right here. Sorry, I'm already logged in. There we go. All right, thank you, Steve. And one last thing before I go. Hey guys, make sure that you that if you're looking for a brokerage firm, you talk with our partners at Forest Park FX. They are, you know, they're the ones that will really find you the broker that meets your specific needs. They are such a great group of people over there because their interests are aligned with ours. They just want to make sure you're successful. Whether they can help you or not, they're going to be there to answer questions. And if you want to get to them, I would click on this little link where it says reimbursement program, or right here on their icon, and right at the very bottom, you can contact them through Skype and email. Right here, and they're very good about answering you directly. And if you are not in the United States, if you're out in Europe or Asia somewhere, or just not in the United States, you can also enroll in our reimbursement program where you can get ForexAnalytix paid for through your through your trading. So make sure you check them out. So Steve, how you doing today?
I'm good, mate. How have you been?
Good. Just about ready to start packing. Getting ready for a trip. So yeah, it's always
have a great trip, Blake. Have a great.
Yeah, and you know, it's the actually the more difficult part is getting our house ready for guests that are going to be watching our our animals and our house and everything else. That's always the more challenging part. For me, it's easy. I just throw a bunch of stuff in a bag and go. But it's getting the house prepared for visitors. That's always the challenge. That's more of the challenge than anything. So
yeah, it's one of the issues of having pets. I mean, you.
Yeah, exactly.
I would have done it, Blake.
I don't know if you would want to be here. It's too hot. It's too hot.
I know it's pretty hot here too, buddy.
Oh, I'm sure. Yeah. Anyway,
Coach, if you're looking for house sitting, you can come here in August and you can do some house sitting here. I have 2 cats and, a water tank full of fish. So, you're more than welcome.
Okay. All right. That's my side job.
Well, guys, I want to wish you guys a great week. And like I said, if you're part of the ForexAnalytix community, I'll see you guys in the chat room. I'll be in there, sporadically today, but and won't be there tomorrow as I'll be traveling tomorrow. But on Wednesday and Thursday, I'll see you guys. And while I'm out northeast, I'll chat with you out there. So
yeah, and take some pictures of you and the members having a few drinks.
Oh, I will.
All right, buddy.
All right,
have
guys.
Have a great trip, Blake.
All right, thanks, guys. Have a great trading week. Good luck.
Bye-bye, mate.
Bye-bye.
Hey, Steve, how are you today, buddy?
I'm good, Dale. How have you been?
Pretty good. So I'm very interested. Fine. Mainly watched the British Open. You either have to be in the pool or inside, the way it is right now. So
yeah, that's very true. Actually,
been doing a little swimming.
Very true.
Yeah.
So what were you about to say? You were about to say something about the market.
Yeah, I'm interested in what, if you're getting some confirmations on some of this stuff. We're waiting for USD SEC to confirm back to the downside, see if it's holding that line. And what your thoughts are really how quickly the shift in sentiment went from, boy, I hope there's a break to buy in the end near 11.5 to, I don't know if I want to buy it now.
No, I agree with you. But first of all, let's wait to see how the day closes. As always, right? Second of all, as you see, I mean, we are seeing some very nice rebounds, and obviously the dollar has been pulling back and quite hastily. There is no question about it. But for example, Euro USD is still, resisting a break higher, right? So this is something to notice. Cable has had a very nice reversal on Friday, but to be honest, we've seen many false starts.
Yeah.
So as long as we remain above 133, I would be quite cautious, right? Although we have to admit that, you know, we hit the 127% extension on Thursday, but we did pull back to close above the 130 level on a daily closing basis. Then the next day, we more or less, you know, started climbing higher from there. So, and we are also seeing some RSI divergence. I mean, it's quite clear. I mean, we've had this divergence since May. So it's already like a 2-month divergence on the daily chart. You know, given the fact that it has been beaten down, at some point we should see a larger rebound. But as I said, in my opinion, 133 is going to be, you know, what is required having to do with confirmation. Now, having to do with the USD yen, you said very rightly so that we seem to be breaking below this trend line resistance once again. So yeah, 111.50 looked like a nice area to rebound, but you know, this area here, the 110.80, also has like some previous highs, etc. So you know, let's see if this area is going to hold. If it doesn't, and we keep plunging lower, yeah, that's going to be a totally different thing. Anyhow, I've abstained from trading the USD yen in a very, very long time because, in my opinion, it doesn't even trade like a currency anymore. I mean, its usual correlations have completely broken down. We've seen it do funny things like being the only currency that is dropping against the US dollar days that the US dollar is weak, or the opposite, the only currency that might be stronger against the US dollar or whatever. But and its usual correlations with risk also seem to have gone out of the window. So I'm, you know, I'm just an innocent bystander here. I'm just monitoring it. I'm not doing anything with it. I think there are better opportunities out there. I'm still involved definitely with the USD CAD. I think that Friday's reversal in the USD CAD is telling. This was a very nice tweezer top here. I think this was an ABC correction higher within likely an ABC. So I'm looking for another leg, at least one more leg lower towards 130, where I'm looking to actually take profits. I would be very, very surprised if the USD CAD didn't push lower once again, you know, before it actually recovered. I would really, really be surprised. I think technically speaking, it looks very nice for one more push to the downside. The instrument that has caught somewhat my attention today is copper, actually, because copper might be making an attempt at a breakout from this descending wedge. There is a target, there is a double top target down at 256, but you know, we hit the 161.8% extension of this range that we had. And you know, I do see something that looks like a descending wedge here. So I do think that there is a chance for a rebound. Obviously, I don't have a position yet because I want to see how we close today. But if we do close today, let's say above 278, I'll probably be buying some for a nice rebound here. But it's definitely something that I'm monitoring closely. Other metals are also making rebound attempts, like platinum. Pushed once more to a new low, but you know, we had a very, very clear RSI divergence. We seem to be recovering. Of course, you know, platinum needs to do a lot more to prove that, you know, this is anything different than just a little rebound. Palladium, after breaching through the 900 level, has come back at the 900 area. It's very interesting to monitor here, actually, if the 900 area is going to act as a resistance at this point, and we're going to move lower from there, which I think is quite likely, I have to admit, or if something different is going to happen. So, you know, metals are still have my attention. Crude is consolidating near the lows. I think that $66 horizontal area of support, because it's a triple confluence of supports, actually remains extremely crucial for the uptrend. And until or unless we breach below that, you know, I maintain somewhat of a bullish bias, but definitely I wouldn't be buying it until I see some kind of a continuation candle higher. Aussie is consolidating. Blake showed it before. I think it's consolidating within a triangle. This looks like a triangle. RSI is also rebounding, but in a way, in a manner that more or less looks like it wants to just overcome the oversold conditions. So it looks to me like there's a decent chance that this is just going to continue lower. Same thing with the Kiwi, another triangle here, right above some important trend line support. We have actually two trend line supports that you should be monitoring here. It's actually this one and obviously the triangle ones, because if we break below, I think that we should extend towards this confluence of supports of the 65-cent area. So I think continuation lower, quite a likely scenario, especially as long as we remain below 68.8 cents. So bottom line, as you see, I don't think that we have confirmation yet for a general dollar breakdown. Dollar still seems, this is the DXY daily chart, I think that it looks like we're still in a triangle, right? Of course, we got a very nice reversal on Friday. On Thursday, we got a nice first signal that it might be reversing, because we had that very long upper week in shooting star, in essence. Then we had the very nice continuation on Friday, but that's not enough to call this a breakdown, because simply, as I said, the triangle interpretation is a very likely one. So I would definitely be monitoring very closely this 93.90 area. I can't honestly turn bearish until we, break that. So until we breach below there, I don't think it's worth jumping the gun, because you might be hit in the face by continuation higher in the dollar. So same thing with risk, meaning I see risk that has stalled here. Previous resistance now has been acting as support for 2 consecutive days in the S&P. You mentioned the level before, it's roughly 27.90. And if we want to look at the bigger picture, I think that 26.90 is a very critical area. It's an area of support, support resistance, held price action the previous time we tested it. The 200 DMA is also there. So even if we break below 27.90, I think if we want to be looking at a longer term sell-off, we can't actually do that unless 26.90 breaks, having to do with the S&P, right? Nasdaq still pushing lower from the confluence of resistances here at 24.35. But so far, I mean, we've seen like 3 so far today. Overnight, it's like 4 days lower. But we've in essence retraced very, very, very little. I mean, we haven't even retraced. Look at this: 1, 2, 3, 4 with today's overnight price action. 4 days lower, which haven't proven enough to retrace even the price action that we had in a single day here in the 17th of July, this candle higher. So that doesn't look yet like a bearish price action to me, right? And even if it does push lower, I would be definitely looking at this ascending trend line support, because unless we break below it, I don't think there is something to see here. I mean, something to write home about. There is no major technical event that we should be considering. IWM also consolidating near the highs. Confluence of resistance is at 171.83. The DAX, nice rejection from the confluence of the 61.8 and the 200 DMA. But as I wrote in the weekend analysis, 12,400 remains support. So I'm holding a small bag having to do with expectations here. I think that this might be a consolidation. I would definitely need to see a break below this ascending trend line support to actually be convinced that something bigger is brewing here. I mean, on the bearish side, right? FTSE consolidating near this bull flag's resistance. A break higher should probably indicate a resumption to new highs, while a rejection, I think, should bring us back towards the bull flag support at perhaps what would prove to be like a more complex correction. The Nikkei is still trapped by the 23,000 area. I mean, it looks like it wants to move higher eventually, but 23,000 as an area of resistance has proved its resilience already multiple times. So I have to respect it. I have to respect it, and I have to remain very cautious unless or until it breaks. Now, I wanted to show something else. This is the FXI, right? This is the large cap ETF, the Chinese large cap ETF, which shows a very clear correction here, perhaps an ABC, right? B being a triangle. And we had a flat top triangle here, which gave us a breakdown, and then we rebounded higher. And this looks like it can even end up being like an island reversal. So this looks definitely like a continuation formation, and it still can prove to be a continuation formation. A perfect ABC target would be down at 39.53. So theoretically speaking,
I wouldn't fade that island, Steve. Good eye on it being an island.
Yeah, it looks like an island, doesn't it? And especially I think that if we break above this little high here at 43.35.
Yeah,
I think that this can turn around and trap a lot of shorts at the worst possible point.
yeah, they are trapped if that happens. Maybe back to 44, 45. Back to the breakdown out of this thing.
Yeah, and look at this RSI divergence as well. I mean, this is quite. This is what we call also like reliable RSI divergence, because the first RSI reading was like deep in oversold territory, close to 20, and this one, the diverging one, is a little bit above 30. It's like 31, 32. So I'm closely monitoring this, because I think that if it actually accelerates higher and this indeed gets confirmed as an island reversal, a lot of the instruments that we were looking for, like the Kiwi, the Aussie, the copper, which seem to be consolidating, can actually, instead of can also prove that instead of being in consolidations that are going to break in the direction of the trend, can actually prove that they're more or less in some kind of a bottoming pattern, right?
So, great chart to show, because it's really kind of the linchpin, that in the yuan. If we're going to start heading up, would that kind of say that the yuan might be bottoming out at these levels and on its way back down?
For sure. Okay. And when I say for sure, I mean I'm not predicting that it's bottoming out. What I'm saying is that it's a necessary element for that to happen, right?
Okay.
So we've already seen on Friday what could be a reversal candlestick. So far today's price action though does not confirm, but it's still early in the day. For example, because we've seen that many times. Friday was a very nice key reversal, like a shooting star. So if today we invalidate that, fine. I mean, it was just like a false signal. But
it wasn't a key, I don't think. A key has no. Engulfing, right?
Yeah, but let's assume that today's candle, which is so far like a bullish one, reverses and it closes lower on the day, right? So in essence, that is going to be more or less proving that Friday's candle was not an accidental reversal. And don't forget that we're at the 78.6, right? So I wouldn't advocate that people should be fading this yet, but I'm saying that, I also keep an eye at the USD/CNH, because I do think that for all of those to take place at the same time, I mean, seeing copper, Aussie, Kiwi, the FXI, all of them like recovering strongly, the USD/CNH has to reverse, or at least, at the very, very least, it has to stabilize, you know what I mean? Because this acceleration higher, I mean, this move higher has been more or less parabolic.
Yeah, the weekly shows how parabolic it is.
Yeah, exactly. We can switch it to a weekly chart if you want. Here it is. There it is. Yeah, it's vertical, really. It's vertical.
Yeah. Moonshot.
So those are the things I'm currently monitoring. You said very well that it's a Monday, so starting a little bit cautiously, seeing how things move. For me, it doesn't matter if it's a Monday, if it's a Friday, if it's NFPs. You'll remember me. I mean, rather recently, a month ago, I even opened the position like for the a dollar-denominated position like before the NFPs on a Friday. But it's not only that it's Monday. It's Monday. It's in the middle of the summer, and as I said, we are seeing a pullback in the dollar, but we don't have any technical confirmation that this is some kind of a reversal. So, any way I look at it, any way I slice it, besides being short the USD CAD, which, I had my technical reasons to be so, and it was like a selected pick, I would rather wait a little bit more, because I think it's, no matter which kind of a direction you want to take here, it's a little bit of a coin toss. And, I don't like coin tosses, right? I mean, I'd rather have like a higher probability of being right, and not just go with some reward to risk ratio, which, okay, you can just trade with some reward to risk ratio, saying that, okay, it can be a coin toss, but as long as I have more than 1-to-1, it's more or less okay. But I'd rather, feel like I have like a 65% chance of something working. That doesn't mean that you're always going to be right, but when you feel it and you have some experience in the market, it's always a good sign, right? Now, having to do with USD NOK, I also wanted to show USD NOK, because if the triangle interpretation here is a correct one, I would also expect the USD NOK to find some kind of a support here. So, this doesn't look, if you look at this chart horizontally, having to do with horizontal support resistance levels, this doesn't look like a very interesting level, to be looking for support. But if we take the triangle interpretation, it can prove being quite an important level. USD SEK is also not far away from this ascending trend line support here. So USD SEK also more or less at an area that can create some kind of a reaction. Let me also show the USD, the Euro Swiss actually, and the USD Swiss. First of all, I want to show the Euro Swiss, because if you remember, actually this has played out perfectly. I mean, it's like we knew exactly. I mean, we even got the angles of this. So we got this rebound that we expected, for this pennant to be retested. Actually, it's not only a pennant; it's like a confluence of resistances that we had up there. And we're now moving lower, and we're currently testing this trend line support. So Euro Swiss is something that is 100% in my radar at the moment. We're currently testing this trend line support. We're also testing this 50 daily, simple daily moving average. So, confluence of supports here. I think that if we break lower, Euro Swiss might actually produce one more leg to the downside. And just by looking at the quality target, that would target like below 111, right? Now, USD Swiss, I'm looking this as a possible flat top triangle, with obviously this 1005 level being critical resistance. I think that if we break above it, we should extend. We're currently almost testing this trend line support. A break lower from here can bring us down to retest this broken trend line and this horizontal area of support. 200 DMA also converging there at 97.5 cents. So, I think that we can either see a rebound from here, or from 98.50, which is horizontal support, or 97.50. Bottom line, as long as we remain above 97.50, I would find it very hard to persuade myself in being short. We had a very strong move to the upside. It looks to me that sooner or later, this thing is going to produce at least one more leg to the upside. So I'm also, keeping, an eye on it, like at least a couple of times per day. I don't think it's going to break out like imminently, but it might do within a few days. So I think this more or less pound yen. Let me also show this pound yen moving nicely towards support. I think that if we break this trend line support, especially the 144.50 level, pound yen should be trading a lot lower. So this is something that shows me that the USD yen might move lower, but I don't want to extrapolate like this. I'm just commenting. Euro yen also showing a nice reaction from that area we were looking for, but I would still be looking at this 128.60 as support. I'm still not convinced what the Euro yen has to do. Actually, Euro yen looks to me like probably the best pair from a technical perspective for people that want to be looking into being short the yen against something, right? We had this move higher, we had this corrective move lower, or what can prove to be just a corrective move lower, like an ABC within the channel. We're breaking above it. Now, if this proves to be like a pullback and then we thrust higher once again, I think that euro yen doesn't look bad to the upsides. I know it's it's very contradicting having to do with how other yen pairs look like. That's why I'm also not fond of trading yen pairs at the moment, but definitely euro yen looks good position for more strength if something needs to go higher in the yen universe. I think that one looks good. Aussie yen still looks like to be in a consolidation that has a very good chance of breaking the downside. Kiwi yen, look at this, some kind of a triangle. Somebody can say that it's a descending wedge, but anyhow, we're still holding it, and we're still slowly moving lower. The form of the move lower doesn't look impulsive to me, for sure. I think that technically speaking, it's quite a mess. I mean, yeah, having a bearish bias makes sense, but I don't like the way it's moving, the speed at which it's moving lower. I think there are better opportunities out there. I just know that people monitoring it, and I want to show it. Let's have a look at the euro pound as well, and then I'm going to go through questions. The reason I want to show the euro pound is that euro pound got rejected. I said that for me it's not only about breaking above this descending channel, it's about this horizontal area of resistance at 99 at 89.60, 89.70. We got rejected from there on Friday. Now the question is this what we're about to do here, or this? So I'm very closely monitoring, because if we find support somewhere here, let's say roughly 89 cents, 88.90, 88.70 up to 88.70, anyhow, anywhere between 88.70 and 89 cents, and we just move slowly lower, we retest that area, and then we start moving higher, I think I'm going to be buying the euro pound, right? Because then we will have seen a break out, a retest, and a continuation higher. And given the fact that we were trapped in this slightly descending wedge for 9 months, whatever it was, I think that there must be a lot of stored energy here, like a dynamic energy, which for those that know physics, might finally get transformed to kinetic energy. So
well, this pair certainly absorbed a lot of my energy.
I'm sure about that.
So I mean, that should certainly help the springboard effect. What do you think?
Absolutely.
All right.
Absolutely.
Glad to see you finally agree with me.
So yeah, I'm now very carefully monitoring it, because for the first time it shows that something might be about to happen here.
You're smart to wait. You just have to have an opinion. You just have to have an opinion, either be bullish or bearish, and just be sitting with it all this time, not being proved right or wrong, to have had a lead into this.
I've said it many times. For me, one of the biggest benefits in monitoring many markets and being open to trading many markets is the fact that you don't have any second thoughts about abandoning a market and saying, the hell with it. I don't want anything to do with that for a period of time. For example, like I'm doing now with the yen, right? I'm like, oh, the hell with it. I don't want to do anything with it until I can, again, feel like I have a good grasp of what the hell is happening here. I mean, why should I be trapped or, strive with, guessing or whatever? I mean, there are other opportunities out there, right?
Yeah, that's good mentoring. You don't have to get involved. It's okay to say I don't know, because saying I don't know and waiting for a resolution saves you a lot of, I don't know, just the concentration you put into when you have a position on.
Capital,
emotional stuff.
Yeah, everything, exactly.
Yeah,
exactly.
Yeah.
Exactly. By the way,
you have a lot of wisdom for you guys.
Thank you. By the way, you were telling me before the webinar that we have a nice lineup of guests this week. But perhaps you want to tell people who we're having this week on.
Okay, well, we have Kim Klayman, who's an options trader, an options pro. He's on today. And then tomorrow, let me just get to it. We have Jake at Forex Cobain, found him on Twitter. Tim Knight, you ever follow him? His Twitter handle's at Slope of Hope.
Yes.
And okay, he puts out a lot of excellent stuff. And then David Brady, who was kind of a face favorite last time he was here, people are still retweeting his interview. And then to celebrate the lunar eclipse, we have Norm Winsky on Friday, the Astro guy. And I've asked everyone to put the dark side, Pink Floyd, the dark side of the moon on Friday, so they get in the mood.
Okay, sounds
That's
like
it. I have no one for Saturday or Sunday.
So no specials this weekend, eh?
No.
So no specials this weekend. So we will have some free time to go do some swimming or whatever.
Yeah, recharge.
Okay, nice. Let me go through a few of the questions, and then we can check if your guest is here, so we can start the interview.
Okay.
So let's see, what do we have? Rebounding above the ones given the I think Euro USD can rebound up to 119.50 to 120 level, or it will be capped at the 118.50. You know, one of the reasons I would be quite skeptical in buying the breakout of this triangle, if it does break out to the upside, is the fact, as you mentioned, that 118.50 is also a very important level. So, you know, buying a breakout here at 117.50 for 100 pips for my trading style, because, you know, I like to stay in positions, like for a few days or whatever, and look like I can even go in a market with like 200 pips of stop loss, looking to make 300 pips or whatever. So for my trading style, I wouldn't be buying a breakout because of the existence of 118.50, as you said. So yes, I do think that it can stall, Charles, at 118.50. But if it does break also above 118.50, I think that there is a very decent chance that it's going to go up to at least 121 after that. So that's my position having to do with Euro USD. Now, on the other hand, if it breaks below 115, I think that it should be headed to 113 next. Okay. So in essence, a break above 117.50 here, in my opinion, just opens up 118.50 for a retest. But a break above 118.50 probably opens up more upside, quite a lot more upside. Okay. Look at the DXY weekly chart. Do you think we can have an inverted head and shoulders pattern soon? Let's have a look at it. Yeah, I see what you mean. This is what you mean. And something like this here, missing a shoulder here. Yeah, I guess we can. But you know, I think it's too early to say. Right? It's too early to say. But we definitely can. Speaking of the weekly, though, since you mentioned it, and speaking of the DXY and the weekly, just look how many upper wicks we had in all these candles, right? Which shows how obvious it is that this 95 area is a very hard nut to crack, right? I mean, we've seen many attempts to break through this area, and all of them have failed so far. And this is something to pay attention to. Many funds
especially Thursday when we had a double top at 95.50 and they just broke through there to clean out the buy stops and failed.
Exactly.
Yeah.
There's a question about gold and USD CAD and gold. I covered them, but I'm going to say it very fast. USD CAD. What did I do? Here it is. Okay. USD CAD. I think that seeing Friday's candle one more push lower towards 130 extremely likely. So I think there's a very high probability 130 is going to be tested again. And having to do with gold, having to do with gold. I'm monitoring this descending channel. Nice reaction on Friday, but gold has to do a lot more to prove that it's actually reversing. At the very, very least, I would want it to break up above this ascending trend line support that might act as resistance this time.
Where's it come in?
Roughly, at the moment, it's passing like from 1245, roughly, but for every day, you know, it moves a little bit further away. So,
thank you, buddy.
Gold might rebound from here, but I think we need a lot more evidence to jump on the gun. Hank, what you can do is that you can review the review the recording posted in YouTube afterwards. Many FANG stocks report this week, Bob says. That is very true, and that is why tomorrow I'm going to go over, I did it last week, I'm going to go over the FANG stocks again from a technical perspective, so we can all know what we're talking about. So, thank you, Dale. Enjoy the interview.
You're welcome, buddy.
See you tomorrow again.
Okay, thank you, Steve Volge. Hi, Kim. Thank you so much for taking time out of the trading day to be with us during the dog days of summer. I'm now making you the presenter, and you'll be able to show your screen, and looking forward to hearing your voice. See if your mic is turned on. It is. How are you today, Kim?
Yes. Hi. Hello.
Hi. Great to meet you.
Great to meet you. Good to have. Good to be on your show.
Okay.
And thank you for having me.
Okay. Well, Kim, do you see the drop-down menu? Are you going to be showing any charts or your website? Because right now you can share your screen if you'd like to.
Yeah, well, I don't have any charts to show. I can maybe show something from my website, how we manage things, how we do things in general.
Okay, or I could do that. So yeah, you could share your screen, show your website. You see the drop down to share screens?
Yeah. You can see it now?
Okay, there you are. Yeah, steady options _ So that's Kim's Twitter handle is steady options _ @ So Kim, you know, I know what you're doing now. You know, you're an options guy. I'm interested in how you got into the trading business and what you were doing before, and who do you blame for getting you involved in this addictive industry?
Right. So basically, I'm a software engineer by training. I was a software engineer for many years, and trading was always kind of my hobby, my passion, you can say. And then in 2012, it was kind of opportunity because our company, when I was working as a software engineer, was shut down. And I got an opportunity to get into trading business as a full-time trader. I basically became a full-time trader, full-time options trader in 2012. And as many traders, you know, my style evolved over time. I started basically with stocks. I mean, I have been actively involved in financial markets since more or less 2002, even before a little bit, but pretty much actively involved in 2002. And at the beginning, it was stocks only. Then I realized that I want to be more involved in options. And the main reason is
that was my next question, was why you gravitated to those kind of instruments.
Yes, because the options are much more flexible. Because if you think about it, with stocks, you can buy stock, go long, or you can go short. That's the two options that you can go. So you can benefit if the stocks goes up, if you're long, or if they go down, if you're short. But what if they go sideways?
Right, you could capture all that premium. You know, I have a saying, do you find this to be true? It was in my more skeptical and jaded days that options are like relationships, 90% of them expire worthless. So obviously you take advantage of option decay in your strategies when the market dictates it.
Yes, well, it's a little bit more complicated because in my case, we are actually trading mix of strategies, theta positive and theta negative. Like you said, most of options expire worthless. Well, it's not exactly 90%, it's a little bit less, but
how much less is it?
Well, I actually had an article that discusses this point. Let me see. So the article is,
I was exaggerating.
Do 80% of options expire worthless? So according to CBOE, approximately 10% of options are exercised. Around 55 to 60% of options are closed prior to expiration, and approximately 30 to 35% of options expire worthless. So it's actually much less than 80%, but the point is, what does it mean? It means absolutely nothing. Why? Because most options traders are not waiting till expiration.
Right.
They buy or sell options and they close the position much prior to expiration. For example, myself, well, it depends on trading style, but myself, I never hold an option till expiration week because to me it's too risky. But again, it's a personal decision. So when you buy or sell option, you have to know exactly how to do it. There is nothing wrong in buying an option as long as you know what you're doing. For example, one of our favorite strategies is buying a straddle, and straddle involves buying simultaneously call and put on the same underlying, same expiration. So theoretically,
is that also known as a volatility spread, where the market's indecisive and you're looking to capitalize on one side of the trade that will more than compensate for the other?
Exactly. So you basically don't care which way the stock moves as long as it moves. Now, where is the catch? If you buy a regular straddle like during regular times, and you buy straddle and you think that the stock is going to move, but it doesn't move. So if it doesn't move, the negative theta,
on both ends.
Yeah, you lose at both ends. Negative theta is going to kill you, and eventually it's going to be a big loss.
Okay.
So what we do in steady options, we buy straddle prior to earnings. We buy straddle around a week or 2 weeks before earnings. And the idea is that implied volatility of options before earnings is increasing. And even if the stock doesn't move, the straddle value will usually hold value pretty well. Now, it's not always going to be a winner, of course, but the risk is reduced significantly if you do it this way. Now, if the stock moves, it's a bonus because you can win in two ways. You can win if the stock moves, so you're winning from gamma. And if the stock doesn't move, you can win from increase in implied volatility. And worst case, if implied volatility increase is not enough to offset the negative theta, then it's going to be a loser. But most of the time, the loss is going to be very small. Like typically, the loss is around 5 to 7%, sometimes 10%, but usually that's it. That's usually the most you can lose.
Okay.
So, yeah.
Let me ask you this. You know, I watch some of the guys on CNBC that are options traders, and a lot of them talk about when they see a lot of size coming into particular strikes. I mean, big block orders, high volume. That's unusual because, you know, perhaps, you know, the open interest is 19,000, and then all of a sudden you see 10, 15,000 trade. Are those market tells for you and give you a sense of direction when big money comes in and places big bets in options?
Well, it's a good question. This is what we call unusual options activity.
Right.
Now, the problem is that you don't know what's behind it. For example, if a big block comes, if someone is buying a big block of puts, for example. So the question is, you don't know, they could be bearish on the stock, or it could be a hedge. Maybe they're holding a big block of stock before earnings, and they want to protect the position of the stock, and then they buy a big block of puts. So basically, it's very difficult to know what is the real motive behind those big blocks.
And you don't know if they're buying them or selling them, do you?
Exactly, you don't know. And even if you do, you do know, like I said, they're buying a big block of puts. What does it tell you? Does it tell you that they're bearish on the stock? Not necessarily. Maybe it's a hedge. Maybe it's a part of bigger position. Right. Maybe they're trying to protect the position before earnings. Okay. So personally, I don't really rely on it. And I don't think that there is really reliable way to make money out of those big blocks, because once again, you don't know what is driving those big purchases. You don't know what is his bigger position. You don't know if he's protecting position or whatever, you know.
So we have a lot of, it's interesting you brought up that straddle strategy, and we have a lot of major tech earnings this week. So I assume you're probably doing something with those tech earnings. You know, stocks like Amazon, I think, do they? No, they reported. No, that was Netflix. So I think you have Amazon reporting and some other big tech names, don't you?
Yes. So the point with those straddles is that you really have to know which stocks are suitable to this strategy, because otherwise, if you are buying, for example, Amazon is not very suitable for this strategy, because Amazon straddle is going down over time. So you're not going to make money out of it. So you have to know exactly based on backtesting, and we do very extensive backtesting in steady options. And we see for Amazon, for example, yes, you can buy straddle, but you really need the stock to move. Otherwise, if the stock doesn't move, the straddle most likely is going to be a loser. And I can show, for example, in software that we are using, this is actually a product that was developed by one of our members. So
go ahead. I gave it back to you.
Yeah, you can see it, my screen?
Not yet. You're going to have to show it again, because I just gave you, there it is. Okay.
So let's see stock like Amazon. This software basically shows you the line of a price in the Amazon straddle. So let's say if you enter 14 days before earnings, this is the average line. And you see that average line goes down. That means that if you buy, let's say, 14 days before earnings, and nothing happens, I mean, the stock doesn't move, or maybe moves, but moves not enough, then you can see that this line is consistently goes down, and straddle is going to be a loser. So you really need to be careful with, like with any strategy, but this one especially, you need to know which stocks are suitable for this strategy, and when to buy and on what price to buy. Because, for example, even on this line, if I bought something at price which is significantly below the average line, then you have a good chance to make money. But if you buy at price which is above average line is this black line. So it shows average of last 8 cycles.
Okay.
So this is, for example, one of the tools that we are using in steady options to decide what to trade, when to enter, at which prices. And this is one of the big values that I see in steady options is our community, because members are really very engaged. And this is an example of one of the members that joint steady options a while ago and developed a proprietary program that is very suitable to see how to trade.
I'm a big proponent of communities. Each of us only have 2 eyeballs, and collaboration. 1 + 1 can equal 11 sometimes. So I think that's a great thing that you're doing, especially for newer people that come in. I'm sure that they're taken under people's wings and they're trying to help them. So I'm curious where your head is at right now on VIX strategies, because we're a little bit above the levels we were in February, and it's amazing how quickly people forget the lessons. We had such a many people shorting volatility back in February got taken out and their accounts blown out, and I think they're you can maybe confirm it, are doing the same thing again in here. I'm wondering if you're taking the other side.
Yes, so basically over time, shorting volatility is a winning trade. Now, where is the problem? The problem is, like you mentioned in February, that many people were overleveraged or took position size too big for shorting volatility, and they just blew their account. Now, we have basically a dedicated strategy that does short volatility, and like we explained here, it's basically something that one of our members developed, and the idea is that you do go short volatility, but in a very special way. You do it using a collar. So using a collar, you basically have
You're hedged.
Yes, you basically have risk.
It's not like being naked. Not like being naked in option. So a lot of option writers, for them, for a period of a year or so, they could just be picking up quarters off the sidewalk, and just making money, and then they don't see the steamroller coming, and one of those events wipes out everything, and the collar protects you from that.
Exactly. So in collar, the way we structure it, we basically have risk reward of around 1-to-1, more or less. So for a trade that wins 80% of the time, this is an incredible risk reward. So think about it. A trade wins around 80% of the time, and your winners are approximately equal to your losers. Okay. So this is kind of incredible, but it gets even better. So our collar, we modified it, and instead of using 800 shares of SVXY, or you can use VXX, it's basically the same thing, but you do it the opposite way, but the same principle. So we used, instead of using the shares, we're using in the money, deep in the money call. So what happens in case of very sharp decline, you basically even make money. So this is what happens with this trade in February. Even in the case that SVXY lost 90%, we basically gained 45% on this trade. Now, this is not going to happen very often because, SVXY, it was a very special event in February. It collapsed like 90%. So next time it will happen, I don't know when it's going to be. But in any case, you are not only protected on the downside, but in case of huge move downside, you can even make money.
Okay, well, I'd like to wrap it with, a lot of people over the years that, thought that maybe the stock market was getting rich, wanted to protect their portfolios. So they would buy some insurance. And then they said, well, you know what? It's affecting my performance. I'm not going to do it. I don't need it. What are you telling people right now as far as, the position that the market's in? Do you think it's a good time to have a hedge on? And how do you structure it if you do for the general market, say for example, the S&P?
Well, I think people that have long positions, long portfolios, I believe it's a good idea to have protection all the time. No matter, yeah, especially now, especially when this bull market is what,
9 years old.
9 years old. So I'm pretty sure that we're closer to the ceiling than to bottom. That's, I think, most people would agree. But regardless, I think especially when the stock market is going up and protection is relatively cheap, it's a good idea to have protection. And
like right now with the VIX, you know, the VIX was 10, it's trading 12 and a half, 13.
I think especially now, because 12 is still pretty cheap. 10 was like historically cheap, but 12, 13 is still pretty cheap. And there are many ways actually to structure your protection in a way that it doesn't hurt your gains too much. I mean, protection is going to reduce the returns anyway, no matter what you do. But there are certain ways to do it in order to reduce the cost of protection. And if you think about it, even if you reduce your gains, let's say from 10% per year to 6-7% per year on average, but in a year like 2008, when the market goes down 40%, but your protection keeps your portfolio around break-even or maybe small loss, that's huge. Because to recover from 40-50% loss, you need your portfolio to double.
I know, I've tried it. So Kim, God, what an enlightening conversation. It was great to talk to you today. And you're not from Greece, are you?
No, I'm originally from Russia. Okay. I was born in Russia. I was raised in Israel. Okay. And then I came to Canada 16 years ago.
Okay, so you because of beta and theta and all the other Greek words, you don't have to be Greek to do this. In fact, I have a couple of Greek partners that I don't even think trade options. So I want to thank you for, you know, talking about in an intelligent way, a way for a different approach to the markets and just being long or short like we do, mainly specking on direction. And encourage people to follow you on Twitter at steadyoptions_, and go check out your website. And I want to thank you for your time today and educating me and our community. And you're now one of my Trading Warrior brothers.
Thank you very much. Thank you for having me.
Kim, it was a pleasure here too, Kim. Thank you for edifying faith. Good hunting, and perhaps we could do this again down the road. Absolutely. All right, Kim. Thank you very much. Okay, everyone, that's a wrap for us. And I'll see everyone for Turnaround Tuesday. Remember, don't just count your pips, count your blessings. Good hunting for the rest of the day. See everyone tomorrow. Adios. Thank you, Kim. Thanks, bye.